What is up, everybody? Today I have a special guest. This is Frozen Tundra. He's been in my Discord trading room for a while. And what's unique about him is he's an equities trader. And I don't have too many equities traders who are as active as he is in the trading room. I believe he doesn't trade futures either. So it's kind of a weird community for him to be in, but he's bringing a lot of value to the trading room. He's sharing all the time, and he's doing a lot for the community. And this is going to be a great interview for those of you who are interested in equities. Anyways, Frozen, how are you doing?
I am well. Thank you for having me, and thank you for setting up the Discord chat room. It's a really nice community for those looking to learn more about order flow and trading in general. Just lots of good golden nuggets of wisdom being shared in there. How are you doing, man?
I'm doing well. And just real quick, for those of you who are watching, every time Frozen is talking, I'm going to put his YouTube channel up because he's a bear, I guess. Um, so
That's my spirit animal. It's a polar bear.
there you
I
go.
just sit in the cold and eat fish.
Wait, you're in Wisconsin, right?
Yep, we're
Yeah.
up in northern Wisconsin.
So let's and by the way, subscribe to him, please. Anyways, let's just start off from the top. What made you get into trading? Was it the money?
What made me get into trading was back when I was a little kid, so this was in the 80s, I would see my dad listening to a radio show that was on public radio, and the guy who ran the show did like dollar cost averaging investing type of stuff for just folks, non-investing folks. And my dad would listen to this religiously, so I would come into his office and I'd hear this guy, I think his name was Bob Brinker. I don't know if he's even alive anymore, but I'd hear him talk about mutual funds and equities, and it just kind of was in the back of my head. And then as I got older, I started tinkering with computers in the late 80s and early 90s, and started writing applications, programming, and my first applications that I wrote were stock market simulators. I just thought that the stock market was a very cool thing as a little kid. At that point, the tech boom was about to start, so we had companies like Dell and Cisco and Intel who were just arriving on the scene, Microsoft, and they were just exploding in value on the stock market. I thought this was very neat, and I didn't quite understand how it all worked, so I decided to write computer programs simulating that, and so I'd like play the simulator and try to game my own program to try to make the biggest returns, and I think that was the seed that planted in my brain as a young child, and it's always been with me since then. Always been keeping an eye on the markets, traded, more invested, and did swings throughout the 90s. Um, Using my dad's accounts, he just handed the keys over. Back then, you called in your orders to the broker, so there was no website to log into. I'd pick up the phone as a little kid and I would call in orders and say, I want to buy, this much Microsoft or Intel or Dell. I think my first trade ever was in Dell computers. That was back when they were a publicly listed company. Then they went private. And you'd call into the broker and they'd charge you like 30 bucks a side. So a round trip would be like 60 something dollars. And during that time, it was hard to not make money on the long side throughout the 90s. So I had quite a bit of trading experience by the end of the 90s, just trading tech stocks and the NASDAQ, just going long a bunch of tech stocks over and over and over. So that was the beginning.
So let me ask you this: Were you? What is up, everybody? The real FatCat here. Have you been considering purchasing Jigsaw? The depth of market I use for my day trading. Well, excuse me. It's really hot in here. But if you've seriously been considering it, I can't breathe.
And I'm doing this for you, okay? So I'm entertaining you. I'm begging you, please use my affiliate link somewhere on this screen. Let me try to cut to it because I can't see nothing. You're watching this video. Click on this link. You gotta click on it. And then when you go in here, put in your beautiful name and the last name too. Can't forget that. And then we're gonna put in a very hard coupon code to remember. That would be FatCat, all caps right there. Look at this. Hit next, and boom! You're saving yourself $30. You're gonna save yourself $30 on the professional. You're gonna save yourself $30 on the institutional. And I don't think it works for this stuff. So, yeah, please use my affiliate link. I love you. Goodbye.
Did you continue to do this as sort of a full-time gig, or did you start to go down other paths in
Yeah, I
life?
totally went down other paths in life. I didn't know what I was doing. I just happened to be in the right place at the right time in terms of the 90s bull market that we had in technology. I didn't have any reference points. I didn't have any idea what I was doing. I was just buying technology stocks and just got lucky to be in the right place at the right time and was able to enjoy huge outsized returns. Then the tech boom crashed, and we literally lost like almost every penny that was left in the market. So that was my first wake up call to like, oh, this isn't as easy as this looks. But I was still a kid at the time. I mean, I was in grade school, high school, finished high school, went to college, and ended up studying quite a few different subjects, got a real wide breadth. I didn't really know what I wanted to do. Um, I did start day trading in college, so I ended up opening up a small account and day trading and losing money right off the bat. During that time. So no, I was not in finance sector, wasn't looking to get educated in finance. I was probably leaning more towards the humanities and then towards engineering.
But you continue to trade like throughout
I did, yeah.
your
I
entire,
managed,
yeah.
yeah, I managed. I kept on managing my dad's portfolios, having learned the painful lesson of what the um, tech stock bust was a lot more careful after that. Then I started learning and trying to pick up more information about technical analysis and fundamentals and reading charts. This is going to be the early 2000s, if you will. So leading up into the financial crash of '07, '08. And I was in school studying a variety of different things from psychology to philosophy to pharmacy, organic chemistry to anthropology to literature and history. And um, then I got really sucked into the engineering school and computer science schools, and I ended up switching over there and pursuing that. So I was really writing a lot of programs, doing a lot of computer programming, spending a lot of time in the CS buildings on campus, staying up late writing code, and then trading during class instead of paying attention. So I'd have my laptop open with my trading platform, and I'd be following stocks while the lecturer was speaking.
Let me ask you this. Were you writing code for trading at the time, or were you writing code for something else? Because I know
No,
you have experience with writing code for trading, and if you clarify that and we go down that path a little bit.
yep, all that stuff happened a few years later. The trading programs that I ended up, the tools and applications and algos that I worked on all happened a couple of years later. No, at this point it was writing code for classes, really trying to learn the fundamentals of computer science, how things work from top to bottom. I had a very strong interest in computer engineering as well, so not only understanding how the software side works, but the hardware side, all the way down to the lowest level. So I had a wide breadth in terms of how computers function. And I think that actually helped me in terms of algo development later on because I understood what was and wasn't possible and how you needed to, what frame of mind you needed to have when you're approaching writing algos. So mostly not computer or not trading related computer programs I was writing at that time. Just goofy stuff and school projects at that point.
Now, didn't you start writing uh, what did your algos? Because I know you started writing programs for, and I don't know if they were algos or not. I'm not very smart in that realm. Didn't you start writing programs for traders at some point?
Yes, so after I graduated from college and met my future wife, and some of the programs that I would write at that point were, so she's in the healthcare industry, and as she was building up her resume in college, she would go work at various labs in research. And what I would do is I would write applications that would like crunch numbers for that lab, turning months of work into a few seconds, and was kind of in that industry. I was also working in the aerospace and defense industry on embedded systems at the time as my first job out of college. But once that trading bug came back around, it was always sitting in the back of my head. You know, I was trading during college, and once I started working as a full-time programmer after college, I didn't get to trade anymore, and it just kept sitting in the back of my head. And I contacted some firms out in New York to see what if any interest they had in taking me on as either a programmer or a brand new fresh trader, and I was able to land a position as a programmer for a firm that we won't mention. Um, and I started writing trading tools for them. And this set of trading tools ended up being used by every single trader on their floor. And the risk managers used it to monitor performance, and it was uh, it was a tool that crunches numbers for trading statistics and performance and spits out various ways so you can see the places you're doing well, places you need work, and that kind of stuff. It's something I still use to this day, in fact, for my own personal trading.
So you haven't, from what I understand, you haven't been with that firm for a while now. What
Correct.
what did your trading look like after you left that specific firm, and what did that trading look like up until you came to my Discord, and why did you come to the Discord?
Sure. So that's a wide span of time, but I will say, you know, writing trading tools for traders on the floor gives you a lot of exposure to traders of all different stages, from developing to experienced to head traders to, partners at the various firms, and being able to see every single execution and being able to study that because I had my hands on the data and was storing it in the databases and building analytics software off of that data. You are seeing different trading styles. You're seeing what works, what doesn't work. You're seeing what the truth is behind various traders' performance, and that's quite a powerful thing. Um, my style at that point was very much, so this, when we're talking about dates, this is going to be 2006, 7, 8, 9, 10, and 11. At that point in time, algos were not as dominant in the market as they are now, and relying on tape reading and um, I guess basic technical analysis combined with tape reading was my primary way of approaching the market. I don't think I really had a firm understanding of what I was doing. The setups I was trading were very loosely defined. They were immature. They were what I saw other people doing at the firm and trying to replicate that, but it wasn't really my own. I didn't own it. So I had mixed results. I had a lot of frustration. I made all the beginner mistakes you could possibly make, so definitely, went through that whole gamut of beginner developing trader during those years. And then I left in 2011, 2012, and started trading my own account with mixed success. A lot of break even, a lot of treading water, and savings ran out, and it was time to look for another full-time job to help support myself and my wife.
So, so
Oh,
you,
so what happened after that?
yeah,
The follow-up.
you started to trade. I hope my mic is coming through. It is. So you started to kind of just trade on the side at this point, correct?
Yeah. At that point, and actually, that was the point when I started writing algos. So I left that firm. I had written some algos for them and some like snippets, algo snippets, if you will. These snippets were of the nature, without divulging too much, it was basically little scripts that traders there who knew setups that they wanted to be involved in would sit down and talk to me about, when this happens and this happens and this happens, I want to put this type of size on in this direction here and have an automatic stop in here. So it started with those. That's not like a mature algo, but again, this was pre 2010. So the technology was vastly different than what it is today. So it started with stuff like that. And then it started to mature and get into more serious development, accessing more mature data, I guess, rather than just level one data, and building more sophisticated techniques. After I left that firm, I did work with a couple of other firms and individuals who were looking for an algo developer. And so we actually ended up building a futures algo with one of those group of individuals that ended up spinning up into a CTA, and we had several million under our roof that we were pushing through this futures algo that was actually deriving its data and crunching its numbers based off equities data, which is pretty interesting. But we were executing contracts in the ES for that algo, and that span of time from like 2011 to I'd say 2016, I was working full time at a completely unrelated programming position as a software developer, as a software engineer in a different industry. And then every night I'd come home and I'd work till 1 in the morning or later on this trading algo that ended up running until we saw performance degradation in 2016, 2015, 2016, where it didn't make sense anymore to leave the algo on. The game changed so much from pre-2010 to 2016 with the introduction of HFTs and just the amount of volume those algos were now doing. We did not have an edge anymore where we used to. So
Let,
we turned it off in 2016.
let me ask you this. Were you just monitoring this algo? Did you ever use it for your own account, or were you just simply doing this for somebody else?
No, I actually opened up an account myself through the CTA, and it was I had my money trading in it as well. So I was an investor in the product that I was building as well,
And
along with others.
when you turned it off, it was over with, that specific
Correct. We
job.
turned it off, and at that point, honestly, I was so burned out. I was doing, really long days, 18-hour days, working full time at a completely different job, coming home, working on the algo, and when when the number of investors and the number of money under management continues to rise, the stress levels continue to rise, and when you're working a full-time job outside of that, um, it is difficult to balance and juggle all those things. By 2016, with the performance degradation, with the way the markets had changed, with everything that had happened, I was just so burnt out. I needed a break, and so I actually ended up going a completely different direction. I started co-founded my own software company as well. So it was just a bunch of different things happening. It was at that point my wife was changing gears as well, so we we timed everything up and just decided to leave it all behind. And I took a break from 2016 until 2021, where I did not trade intraday anymore whatsoever. And I still had my retirement accounts, and I placed long-term swings in my own retirement accounts and did fairly well. I mean, anyone who was long, you know, after the 2009 bottom did fairly well just sitting and holding. So I had my investments, had my swings, and just did that while working full time and enjoying some time off, some breath of fresh air after being so busy all the time. It was nice to finally relax a little bit.
So you just started intraday trading again recently, from the
Yes,
sounds of it.
yes,
And in
yeah.
fact, you found my channel. probably right in the start of you trading again.
Very close to the start. Yeah, so all the GameStop and meme hype that happened around the GameStop frenzy early in 2021, it just sucked me back in again. I can't stay away. So after a 5-year hiatus, I fired up my charts again, and I was like, okay, I'm gonna open another intraday account. My swings and investments had been doing just fine, and I was in a different place in life, and my family was in a different place in life, so I wanted to try again. All this attention, all these new retail investors, traders coming into the markets with all that hype, and you had new technology, you had Reddit, you had Wall Street Bets, you had just Twitter, all these new technologies that brought more people to the table, and I like a fly to a bright light at night. I came in and there as well, and what I noticed immediately is nothing that I had used before with success was working anymore, like nothing, and I was just getting just face planted all the time, and so I started looking for a different way, different answers, different way to look at the market. And you know, the thing that I saw was footprint and order flow for futures traders just made a lot of sense to me, uh, just rationally. You know, I have an engineering mind at heart. I think I am an engineer, and the mechanics of market auction theory and um, how volume profile works and how footprint works, as soon as I started being exposed to it, I started digging more and more and more, and it just felt like this was a an edge. It looked like this was an edge. So I started going down that, and that's when I came across some of your videos about volume profile, about order flow, and joined the group. And um, you know, that's when I was introduced to a community that is developing traders who are sharing ideas about order flow, what's working for them, what's not working for them, and they're all futures related, but I just kind of sat in the back of the room and listened and started picking things up and started noticing some repeating patterns as I was applying these futures concepts over to the equity side. It's not a one-to-one. You can't use it um, you can't use it like a just a copy of what these guys in the futures side are doing to
So
equities,
let me
but
let
there's
me ask you
definitely
this.
things there.
Let me ask you this. So I think it's kind of weird that you were looking at footprint because, from what I've heard, equities traders don't do that. Um,
Not that I've seen.
why did you why did you decide to look at what futures traders are doing as an equities trader? Did you have plans on trading futures, or did you want to see if these weird futures things can work in equities?
It's no, I did not have planned to trade futures. It really comes down to understanding the mechanics from, let's approach it from an engineering perspective. Tape reading was a fantastic tool up until the algos overwhelmed the tape and played such games that in very specific situations, unless you're in those specific situations, it's very difficult to have the same edge in tape reading as it was earlier. At least that's my opinion. I'm sure there's better tape readers out there than I am, and they might disagree, but and some people might still be trading equities just by tape and nothing else. But with a background in tape reading, um, you know, and reading the level 2, I was really kneeling on that. And when you watch tape in actively traded names, you can see the speed that everything is going through on the tape. You can see the volume that's going through, but it was always tough for me to remember what prices the sizes were at. So if I saw like a large order come through, like this happens in the ES too. I've heard you say this. You see a large order go through in the ES. I think you have price squawk set up for your trading where you can, and separate like time and sales windows where you can spot those. On the tape and stocks, when you see large orders go through, you got to be really quick with your eyeballs to be able and remember those different prices. And I just wasn't keeping up. Like just on it, maybe some other people can do it. I couldn't keep up with how quickly the tape was moving and where all the size was being done, especially accumulatively. And then when I saw what footprint was, and that it's the tape, but historically with every execution aggregated in that way, it just mechanically clicked and made sense. I was like, oh, this is perfect. This is the historical version of the tape that I'm reading that I'm not keeping up with. So it was like it was like a handicap for me because I could see where the volume was done intra-bar. And the fact that I have never seen other equities traders use this is just really astounding. It's such a powerful tool to be able to see the commitment of participants on an intraday basis in these equities, especially active ones that have fresh news catalysts, because it just gives you such an edge. You can see where they committed, where these large institutions committed and put size on or took size off, and on what side they were doing it. And when you
So
combine that with tape reading, man, that was a huge, just a light bulb went off in my head. Like there's something here. I got to pursue this.
so let me. And this is just from my own observation. When you came to the Discord, you were struggling, correct?
Yes, yes,
And
yeah, I was getting just run over in the strategies that I was using that used to work.
but over time, you started to develop something with the footprint, and this is what we're going to be talking about here in a moment. That's working out
Yeah,
really well. Um,
yeah,
but when you did come here, and I do want to mention this, is when you came to this channel, we didn't really have an equities section, and
no,
I
no,
told you that you do understand that you're, and you wanted to share equity stuff. I told you this is a very niche Discord. For those anybody that wants to join, Frozen shares almost every day. So do I. The link in the description if you want to join the Discord. This is a great way to talk to him more outside of hearing this interview. But I told you you're going to have to constantly be sharing in the equities section, and there may be nobody in there with you. And that was
there
happening.
wasn't.
Yeah, that was happening for a while where nobody was showing up. But now I think you have a decent amount of people in there really interacting with you. Um, so I think that's pretty cool to see that you didn't give up on posting in the equity section, because I have people come in often that don't trade ES, and there's just not enough people in this community that are doing something that's not the ES. Um,
Yeah, and to add to that, I think what's even more cool is now that there's all this information, I'm seeing these things happen on the footprint, these patterns, and I'm combining it with other experience that I have to form trade setups, and we're tracking them over time. And the other people coming in who are coming in from a futures background are seeing it and providing input and ideas that are starting to manifest into other trade setups and other trade ideas. So it's starting to it's starting to multiply and grow and pay dividends, all of this. So it's really cool to watch.
Now, let me ask you this also. Why didn't you just go to an equities trading room? Why did you decide to come here and stay here?
I think that when I saw your videos, I, it's no secret that you speak bluntly and you do you're one of the few folks who shares the hard right edge. You shared live trades, you shared things that I just never saw, and there wasn't any of this, BS about buy this course, buy this, buy that. Um, I I'm so tired of these YouTube trading gurus, um, or furus if they're fake, that are trying to sell everything. It's just so exhausting. On YouTube, you can find just everybody is trying to sell something. They have these fancy thumbnails, and without getting into the thumbnail thing, um, I I listened to your videos and then listened to a couple more, and I was like, this guy's being genuine. This is for real. So I'm gonna take a shot in joining this. I mean, all the other equities rooms that I've ever jumped into, it's like either alerts or pump and dumps or just crap. It's just garbage. And there's no alerts in your Discord. You're not trying to sell courses or materials. You're not pumping any equities or futures or anything. It's just It's just like, here's what I saw, here's what I think would happen, here's how I'm going to approach it next time. It's like genuine, solid information. That's what attracted me.
Oh
It was
yeah.
unlike anything else I had ever seen on YouTube.
And sharing the fuck ups too is a real big
Yeah,
thing. Uh,
transparency.
oh
Yeah,
yeah.
yeah.
And I also got to say, and you're probably experienced. Well, you are experienced in this. You just
In
mentioned it.
fucking up? Oh yeah.
Well, not the fucking
I'm
up part.
very, very good at that.
What I'm saying is, when you're sharing when you're sharing your methodology with others, I get more I get more benefit from it, I think, than other people. Now, other people are like, oh, yeah, this is good. And they're learning, and I would hope that. But for me, when I'm sharing, it really reinforces my ideas. And when I'm sharing, it makes me kind of be accountable for my actions. Um, I've, and I don't know, when you're speaking out loud about your trading style, because that's what you do in this room, you are speaking verbally. That's, in my opinion, are you finding a lot of benefit for yourself by doing what you're doing and sharing and having a YouTube at this point now? Because you do have a YouTube.
Yeah, I mean, I started my own YouTube channel for the purpose of having a free location that I could upload large video files of my own screen record. So I record all my trading using a screen recorder, and then I upload it. It's usually unedited. If it is edited, it is me adding some kind of like text to describe, why something happened. But otherwise, it's unedited, and the winners are in there, the losers are in there, the progress, the painful days are in there, and I completely forgot the question. What was the question? I
Are
just went
you?
off
No, it's
watching
okay.
watching my trading screen here.
Are you finding? Do you
Oh, the helpfulness. Yes,
by
yeah. So
sharing? Is it
yeah,
benefiting yourself from, I guess, not necessarily a selfish perspective, but do you find that sharing with other people is helping you?
no, it absolutely does, but it is from the selfish perspective because the reason I started the YouTube channel was just for myself. I'm not trying to get new subscribers. You're welcome, if you're listening to this, you're welcome to go check it out. Feel free to check it out or not check it out. I'm not doing it for you. I'm doing it for me. I'm
And there
using it
is
for me because
commentary in your
yeah,
videos. So it's not
yeah,
because
there
some
is.
people share videos on YouTube and they're not saying anything. You actually have commentary where you're talking about the trade,
Yeah,
correct? Yeah.
it's hard right edge. It's live in the sense that it is the recording of it happening at that time. So I'm talking out loud to myself as it's happening, and the trades are happening in real time during that recording, and then I just paste the recording. And the reason I did it was because I wanted to be able to watch it from my phone or any other device right before I go to bed so I can review my work because, I have a family, I have children, I don't have a lot of time. I have a full-time job. I'm not a full-time trader. I only trade the first 30 minutes of the open, pretty much. Sometimes the first hour. So I am very much developing my intraday style still. And so having the minimal time that I have, but having a resource like YouTube where you can upload your videos and then see it from any other device, like before you go to bed after the kids are in bed, that was invaluable because I can rewatch my trades and see like, oh man, I missed this, or wow, this right here, this was such a good setup and I was undersized. And next time I see that, I need to really push it because all these elements were in my favor. So when I share on Discord live through your Discord channel, the benefit that I'm getting there is, like you said, reinforcing those ideas and being held accountable for the trade ideas as well to myself because it's in front of a group of people too. And I hope they're coming there, to learn for themselves. I'm not selling anything or saying I figured it out or I have a holy grail. I'm just sharing like what I'm doing at that time and the mistakes that I'm making and what I'm learning from them. So it's very organic, it's very genuine. There's no selling of anything.
And I honestly think that's the best formula for a trading community. And it's great because it's also, well, I mean, the equity section is your section, and at this point, and it's good to have a platform where and that here's the thing. I think a lot of people are very skeptical that sharing somebody's going to steal their setups or edge and it goes away. I think
Yeah.
that's fucking ludicrous, in my
Yeah,
opinion.
I agree. I agree with you on this. And we had a longer talk maybe a couple months ago about this topic, and I agree with you that if you can come in here and I mean all my trades and screen recordings are available for free on YouTube. You can go see what I'm doing. You can see the edge that I'm explaining. If you can make that work for you, that's wonderful. Please share so
Yeah,
that I can learn from you. I don't think that there. I mean, I don't know if this edge will scale up to making billions of dollars. I'm not there yet. So if you find a way to, if someone finds a way to do that, I'd encourage them to share. But no, I'm not scared of this edge going away because the edge is based on very solid principles. Like it makes a lot of sense. It's not just one chart pattern. We're not just trading a trend line break. It has reason and rationale, and there's again returning to that engineering mindset. There's mechanics at play for why things function this way. So the narrative is there, and the
s-
context is there.
let's
Then the technical setups are there. I mean, it's just yeah.
let's go ahead and we're gonna start looking at your edge if you want to get some of your material
Sure,
uh,
sure.
uh,
Let me pop this
prepped
up
up.
here.
But I do want to say what's interesting, and this is I want to pivot back just real quick. Um, sh- share pretty much everything with these guys in this Discord, and you've aren't doing what I shared. Essentially,
No,
you've taken, and that's the thing. I'm nobody in this trading room is trading just like me. Nobody is
no,
putting on entries in the same place just like me. Somebody's not getting in front of me or behind me on the queue in the same place.
correct.
Um, and there's quite frankly there's not enough of us to really do much damage in the equity or not equity and the ES because it's just such a
Right.
high vol.
You're not gonna move it.
It's not
Right.
penny stocks. Maybe if you had an
Right.
edge in penny stocks, maybe you wouldn't want to share that. But um, you've taken it and made it your own, and you're doing something completely different that I don't really comprehend, and that's what we're gonna do here. So let me
Yeah.
switch up stuff, and now we got your some
Yeah. And
trading
while
stuff.
you switch that over, I will say, when I joined your Discord in January or February of 21, or whenever it was, early in the year, I didn't do much talking or commenting in there. I just sat and absorbed what all the other futures traders were using. And then I was just tinkering with stuff and watching. And I didn't start trading this setup that I'm about to share with you guys until September 1st, or whatever the first Monday was of September, or whatever the first day of September was. The process of sitting, observing, taking notes, coming back to it, seeing the patterns repeat until it started to become a game where I could again, coming back to that stock market simulator that I wrote when I was like 5 or 6 years old or whatever, however old I was. Um, I saw these patterns repeat, and I wanted to see if I could predict or take advantage of the potential there, and that's where I saw the edge start coming out. And it isn't like it's not what you guys are trading. It's just something when I applied some of the principles that these futures traders are applying in the ES or NQ, when I started applying them to various equities, I started to see these patterns emerge, and I started to see, hey, this is working like over and over and over and over and over. Maybe I should start tracking it. Started tracking it, and all of a sudden I'm seeing the edge and the statistical edge in the numbers. And so I was like, okay, well I gotta start trading this.
And this is
Um,
actually working for you. Like you're trading.
correct.
Oops, I accidentally muted myself. Um, hold on. So you're actually trading this. You're trading this with real
Correct.
money, and it's working out really
Correct.
well.
Yes, it is.
For the last how many months now?
Since the beginning of September, I've been trading this and it has been working. And the phase where I'm in with it now is that I have I've gone through several phases with this one setup. So I only trade this one setup and up to this point. And what I've seen is it, the environments and regimes where it works, the environments where it doesn't work, subpar versions and nuances of it that I have started to not take. Because at first, when I started trading, it's not like it was like, oh, here's this footprint setup, or here's this setup, and I'm making millions of dollars. No, no, that's not what happened. At first, it was breaking even, losing, winning, breaking even, and the reason was is because I was taking subpar setups. Like the good setups that I took worked out great. But, and I just mentioned this in the room the other day, large part of trading is knowing when to not participate and waiting for your setup, for your edge to really be there, and then pressing on those moments. And, that's something that I had developed over the past few months while I just watched this every day, this setup form on multiple equities, and seeing the nuances and the differences. And this is what we talk about, is the nuances and differences of these various setups, and why would I wait here, or why would I press here, or why would I be more conservative on this one and cut my risk, or why would I press here and up my risk. Those kinds of things, like the risk management is a huge, huge piece. And I think, I'm sure some famous trader said in some famous market wizards book that risk manage, any trading setup is profitable if you have the right risk management, which may be true. But anyways,
Okay, let's start off. Let me. There's a picture of me in the background. I got to look at this other screen. But let me start off. I want to ask you specific questions, and then we'll go from there. So, looking at
yeah,
what you have up here, first and foremost, is your trading style scalping? Would you consider it scalping?
it was initially a scalp-ish style, and it has since evolved as I've seen. I had to sit through the paint, and you're going to see this in some of the screenshots that I've just. So what you're going to see here is screenshots that I've saved on my computer that I review at night before I go to bed, of trades that I missed, trades that I made, trades that worked, trades that didn't work, and we're just going to talk through them because it's kind of showing some like real world examples of things that I put real money on and it either worked or didn't work. Um, and one of the most painful things was being involved in a trade that you nailed the entry, you nailed the direction, you nailed the timing, and you took, not you, I took the profit way too soon and didn't let it run, and the thing just runs and runs and runs, and I was so well positioned. And this happened over and over and over and over again, and so I was forced to, really go introspective and understand, why am I taking these profits too soon? This type of trade management isn't going to work in the long run. If I am taking profits too soon and not letting my runners run, I'm not going to be getting the most out of these setups. And then when I take a loss, as infrequent as it is, because the win percentage is fairly decent on this, the um,
So
the
you're
losses were large.
you're no longer, because you were scalping, and you're no longer. You're
Yeah,
starting to realize that I can hold these things, and I
correct.
would have to say that as of this year, my trading is definitely coming out of the scalping realm, which I think is an invaluable skill to have. Um,
Yes.
and
And there still is a time and place for scalping.
oh
I'm
yeah.
not saying scalping is bad. There still is a time and place for scalping, and we can talk about that too. It's just, it's not, if you want to be in this for a long time and not just for a good time, uh, you need to find a way to make asymmetrical returns, which means holding on to the winners and really letting them work.
So let me ask you this: what time frame are we looking at? Like those volume. So those are footprint. If you guys don't really know what footprint is, I do have a video on it. Uh, put a
Does
link in
this
the
help if I
description.
blow it up a little bit
Yeah, it
like that?
does. What Tell me about this chart. What are these footprints covering? Time? Are they covering tick? Or what are they, how do they
Yeah,
work? Point and
yeah.
figure?
So that was a another piece of research that I was doing between January, when I joined and started researching order flow and footprints heavily, and September, when I started trading it live, was understanding what version of footprint do I want to look at. Do I want to look at range based? Because a lot of the ES guys are looking not at time based footprints but range based footprints, because the product, since you're not switching products, you're staring at one product all day. The range, you have data on what that range is going to be, and you can see setups using range-based footprints. What I realized after extensive, I mean, I looked at range-based footprints on equities for a long time, and I realized that it doesn't work for me. It may work for someone else who tries it, and if you can figure it out, let us know. Send FatCat or I a message, and let us know that you figure out a way to make it work for range-based on equities. But for me, I ended up switching to time-based, and because my time is limited to the open in the sense that I'm trading usually only the first 30 minutes, maybe the first 45 minutes, and then I'm going off to work. The time frame that I'm looking at that I felt was most applicable to the style and my personality was a 3-minute time-based footprint of these equities. So what we're looking at here is Twitter, TWTR. This appears to be October 27th, and again, these are just screenshots that I saved. I have not prepped them for this specific interview or screen share. It's just I'm going to take you guys through my raw library of screenshots, and when I see something that's of value, basically what I started noticing is, and we're not going into the context or narrative yet here. This is just the footprint, because context and narrative are super important. And I feel like I say this all the time, but if you're listening to this and you have not watched FatCat's video on context, maybe you can put like a link in here, FatCat, for that video, because it's extremely important. We're going to get into that later, but just focusing on the footprint, this is a time-based footprint, a 3-minute footprint bar. 9:30 is the U.S. equities open. And so this right here is the opening bar of Twitter on
First
this
3 minutes.
Three
Correct.
minutes.
Yep.
Yep.
Hmm.
Yep. 9:30, 9:33, 9:36 down here, and we're just taking a look at what's happening here. This dotted line here. This is Sierra charts, by the way. This dotted line here is the pre-market low, which I have Sierra charts calculate automatically
Do
for
you
me.
think you could maybe zoom in just a bit? I don't know how clear that would be. Yeah, that's good.
Is
That's
that good?
good. Yeah.
So this PML is pre-market low. This is VWAP right here. This is the high a day. So I just have a couple of horizontal lines helping me see and visualize things. Pre-market highs and lows were always important to me back in the day, and so it's something that I've brought forward from my history of trading, is looking at the levels of pre-market highs and lows, and maybe just to take a moment to describe why. Because in actively traded stocks with fresh news catalysts, okay, the pre-market high and low are going to define where the participants who actually can hold and move the market, so the big players, where they are drawing a line in the sand on the top and the bottom. That it has significance.
So
Okay.
let me ask you this, and this is where I'm legitimate. Oh, let me ask you this. I muted the mic. Uh, I'm asking legitimate questions here. Is pre-market low and high different from yesterday's high or low? Why is
Yes.
it pre-market? Is this something
It's
that's happening
pre-market.
before the open?
Correct. Yeah. So that's going to be the extended hours of right before the 9:30 U.S. equities open.
I see.
So
Yeah.
U.S.
Okay.
equities can open, I think, at 4 a.m. Some exchanges open, and usually trades start coming in for the most part. I mean, it depends on the equity. It depends on the day. It depends on the news catalyst. Um, So it can, sometimes you see trades starting at 7 a.m., 8 a.m., sometimes you see them as early as 4 a.m. But basically it's whenever the overnight sessions is completed and the morning session is about to start, but before the US market open at 9:30 Eastern is the pre-market. And so with fresh news that happened overnight, these are the levels, the hot pre-market high and low, that the institutions in actively traded stocks, again, actively traded is important because if it's not having any fresh news and not having anything to have players who are in it have to be forced to make choices, um, there you don't really have as much of an edge, in my opinion. If it's just a stock that opened up without any news, why are you looking at trading it that day? Are
So,
people offsides? Are people mispositioned?
and you've been asked this question, how do you figure out what to pick? Or do you have a video on your YouTube channel on
I
it?
do. I just made one that is a super common question. I have a video that I made
Let
answering
me.
that
I'm gonna
question.
show that real quick.
Yeah, it's called How I Pick Stocks or something like that.
Yes, and you put it up 4 days ago, it seems. Cool. So if you guys are curious about how he's finding this stuff, because that's really important, go watch
Super
that
important.
video. Correct? You would say, so that way we can
Super.
maybe pause this video here and go check that out, or what are you thinking?
Yeah, I
Um,
mean, I think it's only like a 3 or 4 minute video, right? It's not long, and
cool.
yeah, stock picking is extremely important because if you're not putting yourself in position to look at the best possible opportunities for the day, then what are you doing? Like, you need to be looking at the stuff that is going to be having the highest possibility of moving, and the way you do that is by finding actively traded stocks with fresh news catalysts that are forcing participants who are either not in but want to be in, or else are in and need to get out or need to reposition. They have to make choices, and if they are large, like funds um, or large traders, they have to make choices. And that means that they're going to be moving the market. And those are the names, those are the stocks I want to be involved in. I don't want to be involved in something going sideways all day.
All right. So let's take a look at this. So what the market's opening up.
Yep,
What
market's opening it up. Where's the time of day? 9:30 there. So
what
9:30.
what are you looking
Um,
for on this? What is that setup? Let's
yep.
see it.
So the setup it involves context and narrative. So before we go, I have other screenshots that will illustrate that better. But the basic pattern that I saw repeating after looking at this over and over at actively traded stocks for months at a time was that when we have a break of pre-market low, which again on an actively traded stock, and I don't remember what was on this day on 10/27, so we have to go back and look at the news of what was happening on that day. But the name was actively traded in pre-market. This pre-market low broke. It broke hard in the sense that it wasn't just a little dip your toe underneath the pre-market low. It broke hard. It broke on decent volume, and there were these bell curves in the volume profile of the footprint,
I would have to
right?
say those are ugly bell curves, but I see
They
them
are.
nonetheless.
They are,
Yes.
yeah, they are not pretty bell curves. And if you're expecting ES bell curves on equities, you are going to be waiting for a long time. So they are, let's call them distribution zones, or let's call them, I don't know, I refer to them as nodes because there's like one node right here, and there's a second cluster of nodes down here. So two distinct nodes, and importantly, in between them is a thinner area of volume traded, which you can see on the footprint itself. Like up here, you can see the bid did it. These are in thousands of shares, by the way. These are so this is 37,000 here, and this is 11,000 on the offer here. So 30,000, 37,000 there, 26,000 there. So you see this volume at this area, and then you see this volume cluster at this area, and then down here is my Sierra charts number bars calculated. So this is the total for that footprint bar. This is the delta, negative 160,000, negative 160,000 delta, 536,000 total down here. So what we see, and just again, context, narrative, super important for this. Pre-market low is established by large players. Another player entered and said, I'm going to, or players maybe, I don't know who or how many, but the market was driven down, encountered some support right here. The participant who needed to move their order continued down. Liquidity vacuum here, not much size here on the books. Encountered another area down here. This pattern I see repeat almost on a daily basis, sometimes multiple times a day. And what I noticed it leads to is it leads to a pop on the following bar, so a pullback, if you will, or a pop if we're talking about the short side. The pop comes back up between the two highest areas of volume on this extended breakdown bar.
So kind of like a
So,
low node on a double distribution profile.
right, right. So you see the next bar will pop up and it will come in between here, and I still haven't figured out how to figure out where exactly it's going to stop. I'm not sure if there is a way to figure out where exactly it's going to stop, but what I saw was if it comes back to retest this area, it likely will not only not come back up above here, it will not suck back up into the pre-market low area, but it will also retest the low of day after that. And this is exactly what happened in this example, which is why I saved it and am showing it to you today. So we had a stock that was actively traded in pre-market. We had a stock that had fresh news catalyst. We had an open where they drove it down, encountered some buying here, continued to drive it down, encountered more buying here, good volume here, bounced up, landed between these two nodes,
And you're
and
looking
then went
for a
to retest
pullback.
lows.
You're looking for a pullback.
Yes, I'm always
Okay.
entering, and we'll talk about execution later, but I'm always entering on a pullback because I want to be in the money right away. I do not like sitting in pain. I want to be in the money right away. And if you look at some of my executions, I'm like at the top of the move usually for the shorts and bottom of the move of the pullback on the longs. So what I saw is it continued, it always would go, not always, it would often go retest the lows and sometimes a lot further. So let's just go through a couple of these. Um,
Can
it's
this
not
be
a
done
great
on the long?
example.
Is this can
Absolutely,
long
yeah.
side? Okay.
It
Gotcha.
absolutely can be done on the long side. I'm looking for a, so this is back when I was just saving everything that was driving up through pre-market highs. So some of these aren't great examples for what I'm actually trying to trade. This Microsoft here, what is this? Also 1027, same day. So you see it drive, what is this, 930, right on the open. You
Can
see it
you
drive up.
expand it a little bit there? Yeah,
Zoom
zoom
in
in
there a little bit.
really on there. There we go.
Yeah. So this is 930. We see a big volume total here on this bar. And then if we look at this bar, so there was a pre-market high. Microsoft had positive news on this day, and the buyer came through, broke through whoever was putting a lid on the pre-market highs in pre-market, continued to drive through, and then found this other area here. So, and then it continued to drive higher. So the thesis on the long side here is I would look for a pullback between this node, high volume node 318 here, and this high volume node, what is this, 317s
So
ish
about
down here.
317.40 roughly. You're looking in that
So I
317.40.
scale in right now. I'm
Uh,
scaling in. So I put bid orders all the way through this area, and I try to catch my average in the middle of these. And the
where
thesis
is
is
your
that
stop going? Is
my
that
s- so my
fluid
s-
or is it
it
fixed?
is. It is fluid in the sense from trade to trade. I do not have predetermined stops. I don't have a fixed size stop. I don't believe in that for trading equities. And the stop is based off of the footprint as well. So off of the volume, like, so this area here, right down here, this first node, the bottom node here, if this breaks down, the trade is no longer valid for me because this buyer came through, cleared out everyone selling here, drove through here, not many sellers here, but picked them all up, came up to 318s, took out all the sellers here and continued driving higher. So if this comes all the way back down and drops below this area here, this buyer is not defending this position, and I don't want to be long anymore.
Hence the reason
My
context is so important. And
exactly, exactly.
that's why your risk is fluid on it.
Yes, I don't change. What I always have hard stops in. As soon as I enter my bids for a long, I have my market sell stop entered in. And in this case, it would be below these nodes. I don't want to see it below here. And if it is below here, then I'm wrong. And then I need to get out. But the thesis is that this buyer has interest and ability to buy more of this Microsoft, and they cleared out these guys, they cleared out these guys, and on the breath back in, they're going to defend this level because he wants or she wants to buy more. And the idea is to test high a day. So I'd be looking to get in somewhere around here as an average with a stop below here and looking for a retest of high of day in this type of example. I wonder if I have, I don't have the follow through on that. I got better at taking better screenshots. So let me see if I have a couple other examples.
Is
Here's another
VWAP
one on the short side.
is
Yep.
VWAP influencing your
No,
decisions?
I
No. Okay.
I just have VWAP there to see. Often you see VWAP retests when things run, when things are trending. I don't use VWAP for trading setups.
Gotcha. Just sort of reference, I guess you could say. Contextual
Correct.
reference, I guess.
Contextual
Yeah.
reference. Right, right. And we can talk about the strengths and weaknesses of VWAP, but it doesn't come into play for me here. This is just another example. This looks like it's Facebook on 10/28. Looks like there was negative news here.
Can you zoom in
Broke down.
on it?
Sure thing.
Yeah, get in there.
Looks like there was negative news there. 9:30 open, cracks the pre-market lows. It's not dicking around above pre-market lows. It just breaks on through. Encounters a little bit of buying at 312s here.
Which you can now that's not really a good looking curve there. It doesn't look like a
No,
curve. But
no, it's
you
not.
would get between that and the next high node down there, correct? Because
Actually, it looks like because of these arrows, and again, this was as I mean, I'm still trying to figure this stuff out. So like I don't, like I said earlier, I don't have a holy grail here, and I don't know everything about this. But what I've noticed is that the highest volume nodes are the ones where you want to be positioning against. So this one here isn't the highest volume one in this footprint bar. So it'd be like between these and these, you'd probably want to be entering on. And if it got above here, this is probably your stop, like near pre-market lows.
so you want to get
Because
in on the highest volume bar. Am I
as
mistaken?
close, yes, the idea would be to get your average as near to the furthest pullback from, in this case, low a day, the furthest highest volume node away from the lows for a short setup.
Because I'm a bit
And
confused. Because in the first example, you were getting on inside between the distribution zones, but this one doesn't look as good. So
it doesn't look as good, right?
maybe this is a
It
different
doesn't.
thing.
It doesn't look as good, and this is where the filtering out subpar setups comes into play. Again, I don't have that. This isn't a prepared slide deck. This is just trades that I put on as I'm learning how to navigate this. And part of the risk management is avoiding subpar trades. If I was trading this today, I would probably be starting my position here and scaling in between these two areas with reduced risk because this is not a perfect looking setup for me. So this would, if I did get involved in this, it would be on reduced risk today. But it looks like because of these arrows that I shorted up here against this node, somewhere on this bar, and it looks like I took partials down here as we came down to retest lows.
Well,
But yeah, it's not perfect. You're absolutely right.
let me ask you
Um,
this: why are you scaling in instead of being all in? And this is the futures trader in me because it's easy to get to four lots in the ES. Are you scaling in because it's harder to get it all in at once,
yep,
or
you're not guaranteed to get a retrace, whether it's a pullback or a pop, to those nodes. So you want to make sure you have something on, and that's part of the piece I'm still trying to figure out, FatCat. I'm trying to figure out how to get the best execution on my entry so that I have the most size on, but also don't miss the move. Because I had times where I was being too conservative in an aggressive type of market and I wouldn't get filled, or sometimes I'd be too aggressive in a slow moving market and I'd get too heavy too soon, and then I'm taking heat that I don't want to be taking. So that's definitely an art, and um, if anyone has tips on how to improve on that, please leave them in the comments section.
and
We
also
love the comments section. We love you guys in the comments section.
also one thing you're doing, and we had a conversation very recently about this, is you also mentioned you're cutting these trades way too early, and I had a discussion with you because
Yeah.
I've had the same sort of issues, and it's just going to be uncomfortable. And
Hmm.
you're starting to hold these things a lot longer,
Yes.
and there's a
Yes.
high probability from what you're seeing statistically that where you're able to actually hold these things longer than what you're doing now, right?
Yes, I developed a mechanism for leaving runners on. So when I first started trading this, I would take profit at high a day or low a day, depending on the setup, and I'd be done. And that's what you can see in this AMC. I don't even know what date this is, but the screenshot is from an AMC. It broke above pre-market highs, which I don't have lit. This is my trading software, my execution software's charts rather than the footprint. And you can see I entered here on two separate buy orders as I was scaling in, and you can see how surgical these are. And that's because it's based off of the footprint volume levels that these large participants who are pushing their orders are defending. Like there's a reason why these entries are so surgical. It's because these large participants are defending those areas. That's why it makes sense. Like the setup makes sense.
Can
And
you
then went to retest highs.
can you show us some more footprints if you got them?
Sure thing. Yep. Um, so this looks like it's just a shortened AMD without
And
the
these
footprint.
those
Oh, here's the
candles,
footprint for it. Here's the footprint
just
for it.
real quick, those candlesticks you're showing, you're not executing because of these candles. This is just a
Correct.
reference. Okay,
This
gotcha.
is so that I can see where I executed and look back after the fact and see where I executed, how I executed. Whereas the footprint is not, Sierra Charts isn't going to show my executions, but my trading execution software will. So this chart here with the dots is my executions for this footprint setup, which is not ideal. This is not an ideal looking one. But you can see that um, I entered here scaling in on this, and the problem that we talked about the other day about taking profits too soon. This is me covering parts of my position and the last piece at low a day. And what I've shifted recently is redoing. I looked at the numbers, used my trade analysis tool that I've built for myself. Um, to look at the numbers and see that I'm actually really cutting myself short by taking profit so early. So now I have changed the way I take profit. And you'll see that in some later trades. I'm actually, my first piece taking off is low a day now. So I'm not taking any profits. If I traded this today, I would not take any profits here. The first profit would be here, and then the rest would be runners for in case it ran, because when they run, and often this setup can produce runners because it's usually an institution or a large, willing, and able participant who can really drive the market because they have an order to fill. Again, because of the fresh news catalyst and the context and the narrative and all that other stuff, which is why context is so important. Maybe link the video again a second time now, FatCat, to that context video, because that's so important for this setup, because that's what gets you these runners, and they just keep going. And look at the entry, like it's surgical.
So let me ask you this: when you're cutting these trades too early, is it because you're uncomfortable and it's a psychological thing?
Yep. It
And
was completely emotional, and not having a plan for how to handle trades that were working out. So it's a complete lack of preparation, lack of plan, lack of defined trading setup. So that's just
but
part of my maturity as you become frustrated when you see these run several more points after you were so well positioned. You get tired of not capturing that, and you are forced to do some thinking and self-reflection
but
and figure out how to capture it.
in your defense, you never had the intention of holding trades this long. You kind of went into
Correct.
this with this scalping mentality, but
Correct.
now you're
Yeah,
starting to
because my
see something.
initial exactly my initial research showed that the likelihood of the retest of the low of the day or high of the day was extremely high. So I was just looking to capture the low of the day or the high of the day move. But then after trading it so much, I was capturing low and the high of the day like so frequently, but then it would just keep running, but I wouldn't have anything left. And it was so painful to see the continuation, the runner, the trend continue to go and be so well positioned and not have anything on. I mean, that's just like another beginner trader mistake, even though I'm far from the beginning. That just goes to show that we all have room to improve in various areas that we have weak spots in. So
So, real
uh,
quick, we're at about an hour and seven. Let's take a
sure.
look at the footprint for this specific trade. And then, if you want, we can start closing stuff out. And if you guys generally enjoy this, because I like doing interviews, like I want to do more of this, please let us know and we can do a part two on this. But let us know. You need a comment in the section. If you want to know more about what Frozen is doing, because this is very interesting, join the Discord. He's in there all the time streaming. Go check out his channel, subscribe to it, connect with him. He will share with you and he will answer all your stupid questions. Like,
Maybe.
maybe. And he's sarcastic too, so you better.
Watch out. Yeah.
Yeah. So let's
Well, what
take
else is there to do when
a
the weather is this cold outside?
what is it? What is it right now?
It's like a balmy 30 something degrees. Not too bad for December. So
It's
I know you're
70.
down in Texas, so
It's
yeah.
70 over here.
Here,
Um,
let's look at this apple as just a way to exit the interview with a little bit cleaner of a setup. This appears to have happened on November 2nd here,
just
and
real
this
quick, that
apple,
that last one we didn't look at, you were saying was not clean though, where you nailed the perfect.
it was not clean. No,
Okay,
no,
fair
and this is a
enough.
much cleaner one.
Let's
This is a much
let's look
cleaner
at a
one.
textbook example. All right, let's
This is
take
a
a look.
great example. Here's 9:30, right? So this is the opening bar, and this apple just drives and just crushes the pre-market high, and whoever is buying this thing does it on high volume because the total is down here, and the yellow highlight means that it is within the. I have Sierra Charts programmed to show yellow on the total when it's within 10% of the highest volume footprint bar of the day, which of course on the first bar is usually always, but sometimes it's not, so that's also an indication. But anyways, buyer drives above pre-market highs, clears out pre-market highs, clears out the sellers at 149, clears out the sellers at 49.30, clears out the sellers here at 50, and you have one, two, three distinct spots here. And so I immediately was like, let me get long between the bottom one and the top one. And so
Ah, I see.
I, I layered buy orders all through here like this, and I was looking for highs,
Now,
which,
before you do that, where's our risk? Where's our risk on the downside?
yep. So the risk on this is going to be below like basically below pre-market highs. Pre-market highs. If it falls back down to pre-market highs, you're out. So you
Is it
have
always pre-market highs, or it
no.
depends on the nodes? It
It
depends on the
depends.
nodes.
It depends on the structure of the footprint driving bar. Yeah. So I call this play the opening drive continuation play because it can happen to the upside or the downside. It's an opening drive continuation play. This is the opening drive. You have a willing and able market participant who can move the market. They have an order to fill. They're doing it with volume. They're clearing out sellers in this case. And then
What's
when they
interesting
come,
is there is a distribution curve in those 4910s. That bottom, that yeah, right there. There is a distribution zone there, essentially a curve. It's hard to see, but that pullback on the next profile, I mean, it goes to the high node, but it's kind of getting in between the low noted spot. Hopefully,
yes,
what I'm saying is making sense, and am I understanding the crux of what you're
correct,
actually doing?
correct.
Because this
Yes,
is new for me. This is new for
the
me, so I'm learning.
the the idea, the thesis, and that's great. The questions are great. The thesis is that if this buyer is real, and my based on my statistics, this pattern produces real buyers. If this buyer is real, they will defend this, and if price comes back down here because they took out this seller here on the offer for 52,000 shares. If price gets back down here and this buyer can buy down here again, they're going to do it. In other words, they will defend this level because this buyer has more size to fill. This buyer is willing and able, and this buyer has an order to fill, and they need to get it at the best price possible. So if they're fortunate enough to get it down here, they're going to defend this level, not because they want to defend it, but because they got to put an order on for the best price possible. I mean, this is a point where you can take a look at VWAP and say, if you're an institutional broker filling orders for a fund, you're paid by how well you can execute as close to VWAP as possible. So if you have the opportunity to buy on this bar, you have the opportunity to buy down at 149. Hell yeah, you're going to buy down at 149. You're going to defend that level,
Are
not
you
because you want to defend it, because you want to put your order on lower so you get paid more,
are
so
you
that they send you more orders.
are you waiting for that first footprint to close out before you start
Yes.
executing? Okay.
Yes, I do. I do not place trades during the first footprint. So in that sense, the 3 minutes is a magic number, which I do not like. If listeners are familiar with software development, magic numbers are numbers that have no rhyme or reason. They're just I chose a 3 minute because it works for me. There is an art to trading. There's a discretionary component to this, and trading is not all it's not all math. It's not all perfect and systemic. There is an art to it. So this is part of that art, I would argue. So I ended up scaling in between these two, looking for a new high a day, and that's exactly what happened. This buyer let off the gas up here, let it fall back down to VWAP. The short-term traders who are chasing the breakout and paying up and paying up and paying up, they have weak hands. They sold off into this, And then here, this buyer started resuming again. And guess what? He started resuming between the areas that he blew out large size. He's defending this because he has an order to fill and he needs to get that order filled. So that's where I got in. I took some off at high day, and this thing just kept on running. And I think I have, yeah, the executions are
How
here.
many days ago was this one?
This was November 2nd, so over a month
Okay,
ago.
gotcha.
So you can see here, there's the opening bar. Remember the footprint I had was 3-minute
Yeah.
chart. So 1, 2, 3. This is the 3rd minute already,
And this is
and
when this is before you started holding trades a little bit longer.
that's correct. So
And
this is actually unusual that I held it this long because usually at this point I'd be out by high a day. So, and again, you can see how surgical the entries are using this technique because again, you have a huge edge by identifying a participant who can and is willing and able to move the market and getting in at the places where they're going to defend because they have an order to fill, or at least that's the thesis. The thesis is they have an order to fill and they have more order to fill. And that's where the structure of the footprint is so important because if the structure doesn't have this with the thin areas in between, if it's just a solid block, like if the first footprint bar, this is super important. If the first footprint bar was just a solid block like this, that is not indicative of a buyer who is trying to fill an order. That's indicative of two-way trading. There's back and forth happening here. Okay,
at that point
and
you start to scrub.
I do not take, if this was the first bar
You're
here
not gonna do it.
and it had like large nodes all the way through, I would not be taking that. Even if it was on high volume, even if it was breaking through pre-market highs, even if it was nicely extended, if it looked like just solid bars without distinct value zones, 2 or 3 distinct areas, we won't call them bell curves, but nodes, I'm not going to be taking that trade anymore because it's a subpar play. Oftentimes, actually, I'm developing it for a reversal signal because what I'll see is they'll pop it up, do a ton of volume up here. It'll look like a block. There's a bunch of two-way trades, and then boom, goes and visits lows.
Oh,
That's what that shows. And we can maybe we'll make a follow-up video on that setup because I've been tracking that one along with a couple of other things that are super interesting in the footprint on equities that I don't see anybody talking about this stuff. So it's really interesting research if you're a nerd like us into this stuff. But anyways, so there was my execution. I got long there um, and you can just see how surgical that is. I keep reusing that word, but it's so precise, guys. Like over and over and over, I'm putting on trades with entries like
that
this, taking on minimal risk and the retest of high days. In this case, the guy just kept on going. And nowadays, I have a runner that I put on, but we'll have to save that for a different video, I think. So
so
um,
do you think
there's
this
that.
stuff? Do you think these techniques work in the ES? Or you
Um,
don't know?
I've watched. I don't know. Yes is
It's a different
it's
animal.
definitely it's a different animal, not only because it's a different instrument, but and I trade different names here. There's different symbols. They all act differently. They have different levels of liquidity. They have different floats. They have different participation levels. And then when the news comes in, there's different levels of participation. Not to mention the different market cycles and regimes that we're in that change from time to time. 2 months ago, we were in a very, very strong bullish sentiment market. It was buy the F and dip, and everything's going to go up forever. And today the market just pooped on itself in the morning here. So again, going back to that context and narrative, it's so important. But as I scroll through these images, you can see I mean, over and over and over the entries on
Zoom in on
this
that one a
using
bit
this.
more.
Like,
Yeah.
look at the heat that you're taking on this. I'm usually, and you can see this on the videos on my channel, guys. I'm usually in the money like instantly because
How often is it not working for you? That's what would
um,
you say? Are you having positive expectancy, or is there obviously
there
you
is
need it?
positive
Okay.
expectancy, yes. And then statistically, I can tell you, but with the caveat of the statistics also include versions of this trade that I took that are subpar that I'm no longer taking. So from a trade execution standpoint, it has over an 80% win percentage. I'm sorry, from an execution standpoint, it has over an 80% win percentage, which is extremely high.
That's like some options credit spreads shit.
It's crazy. And by executions, I mean out of the total number of executions that were closing executions, so where you were taking profit or loss, not opening executions, what the win percentage is very high, 80s, 90%. The trade percentage, whether or not the trade idea worked out, right now for me, including the subpar setups that I've taken and all the losses, is at 65%. So statistically, there's an edge. And no, it's not over 20 years. It's only over a couple of months. So yeah, you have to take that as a grain of salt, but it's there. And it's working, and I'm tweaking it and finding ways to make it even stronger and stronger. But it all comes off of that principle that if you have an opening drive with the correct structure, that's you identify, and this goes back to, when I was building algos for various firms and the things that those guys were looking for. Actually, it comes back to that you have to find the elephant. You have to find the people who are going to move the name because of there's news and they are forced to reposition or enter or exit. They do not have a choice. That's
Oh,
where the context and the narrative is so important, because you won't get this without that fresh news catalyst. And it won't happen on every fresh news catalyst, because there might be some fresh news catalyst that you come in and two large market participants are duking it out and you don't get these drives. So you have to have all the pieces of the puzzle line up. And there's the fortunate thing is that we have technology and tools these days to identify those, and you can take advantage of this too. And here's the short in AMD. Again, look at the entry there. This is AMC. Here's Lucid, similar type of thing. Look at the entries on these. I mean, the exits are terrible. You can see this is before I developed my mechanical system for leaving runners on. And these two exits are probably trailing stops that I got emotional on. But I'm improving on that, and so this is just a repeating pattern, guys, like over and over and over. Here's a note I have about a suspicious footprint structure. I don't like the block. Um, the low volume, you can see my note here on low volume. So I make annotations. When I see things fail, I look at why they fail. I look at the footprint. I look at the structure. I try to understand, what could have been the narrative for why this didn't run. And it's making sense. It's consistent. It's working with statistical edge. Um, yeah.
right on. So I just, and let's pivot here and then we'll close it out. Um,
Yep.
you mentioned elephant in the room. You got that term from another developing trader who has, if I'm correct, right? You got the term elephant in the room, and
Oh gosh, I think I got that from watching the Axia footprint
I got,
videos, to be
okay,
honest.
gotcha. I,
Axia has a YouTube that has a lot of really good footprint information if you're looking to build foundations on that. So, if you're looking for basic footprint info, go check them out. I watched several hours of their videos.
so one more question here. Um, how important is trading community? Would this
I would probably fall into a depressive episode and abyss without the trading community, not to be like drastic or overstating it. It's so important to be able to um, share this, because your spouses are most likely, or your significant others are most likely able to listen to it one time, and then they're just like, oh my gosh, I can't handle this. The stock went up, the stock went down, the stock went up, the stock went
Well,
down.
you're
Um,
speaking
oh,
Chinese at that point. No offense to our Asian listeners, but it
yeah,
doesn't. It's not English. It's not.
it's not, and it's not interesting to people. I mean, you really have to have a passion. I've been doing this for a long, I mean, and not intraday necessarily, but I've been doing intraday for a while too. But just staring at markets, and like it has to be something that you is effortless for you to think about if you want to actually have longevity in this. And part of that is having people to talk about it too, like saying like, hey, like here's something that worked, here's something that didn't work, here's me getting my head ripped off. And if you want to see videos of me getting my head ripped off, just head over to the channel, because I share those too. Like it's without being able to talk and share, you don't get the closure to be able to move on, I think. So it goes into like some of the, psychological wishy-washy type of stuff. Some people don't take it seriously, but I think that your mentals are very important as well in trading. Any serious trader, I doubt would deny that. And the community gives you a place to at least be able to converse with other people who have the same passion with you, which is just a priceless commodity for me.
Do you think that you're handicapping yourself by not actually? I mean, it's one thing to lurk. Do you think you're not going to get as much benefit from lurking as you would actually participating and really getting to know other traders?
You mean like on a prop desk?
No, no. So like in our trading room, for instance, our Discord, do you think that you're not going to get as much benefit from lurking as you would from actually sharing and participating? Because that you're very active. You're incredibly active in the community. And what I'm trying to ask is, do you think that being active has a lot of benefits versus just kind of cruising through and just reading stuff and not talking, not asking questions, not participating? Is
Sure.
what I'm saying
Um,
making sense?
it does, and I'll answer with this, and then gotta head over to a work meeting here as well. But if you are not engaging, you're doing yourself a disservice, because at least in your Discord room, there are willing and able other members who will talk to you about software setup. They'll talk to you about trading setups. They'll talk to you about um, just blind spots that you may not have been aware of. So engage, reach out. If you don't feel doing so comfortable doing so publicly, do it privately through a direct message. I think the engagement and the genuine nature of digging and really trying to learn, that's the most important thing. So I'll end it on that. And thank you for having me, FatCat. I really appreciate it, and appreciate everything you do for the community as well.
Oh, thank you, and hopefully your channel explodes at this point. All right, guys. Hopefully you enjoy this. Again, please let us know what you thought of this interview. Do we need to do another one, more of these? Anyways, we'll see you in the next one. Ciao. All right.
Hey man,